Hi guys, this is Abby from The Habit Trader. Thank you for giving time to watch this video. Today, I'll be talking about liquidity and different types of liquidity. So, let's define liquidity first. So, the market needs to generate liquidity in order to move up or down if liquidity isn't already there. So then it will be created. So retail traders basics are like support and resistance, double top, double bottom, and trend lines. So these are mostly generates liquidity to the markets. We expect the price to be manipulated at that around or on those areas. So let's start with this type of liquidity. So you may see price acting like this, right? So it will form this trend line liquidity here. So if this is in an uptrend, retail traders are opt to buy on this areas. Like if they see price go here, so if that will be our trend line. So it expects that they will buy around here or below here and then go to the upside. But this is the thing about the trend line. So they waited a breakout of the trend line to go short or for in this case to go um in a buy trade. So it creates a lot of liquidity here and market will definitely manipulate to grab liquidity before a larger move in the markets. So usually what will happen is that when it is in a trend line liquidity, it will like um go to the apps to the downside for the pullback, but sometimes it will grab the liquidity below this low and then like this and then continue to the downside. So it's always good to follow the trend, but of course we need to always have the confirmation um before taking the trade. So this is a trend line liquidity. Later on, I'll show you how it works or how it represents in the chart. So that is a trend in liquidity. Let's go into to the second liquidity, which is the range. So the range liquidity is like this. So when the price is ranging, right? So it happens to be a like support on this area. And then this is the resistance area, right? For the retailers. So this can be classified as range. So there's a liquidity above and below. So there's liquidity here and then there's liquidity here. Sometimes um it is it is confusing to to check where the price will go first, like if it's like go down first and then go upside or um go to this area and then sweep all the liquidity above the equal highs and go down. So it is important as well to as I've mentioned on the trend liquidity to check the confirmation before taking any trades because sometimes the price is always give us the thought of, oh, it's in a bullish confirmation, but later on it will go down. So it is important, guys, to always check um confirmations and having a multiple confirmations before taking the trade. So let's mark that as range liquidity. And then another one is equal low liquidity. So same as range, it is like this one. So price is like forming. an equal low, or um it it is like a support, like when the price goes down, up, down here, and then you can go down here on this level, and then you will buy, right? But um this pattern right here is having a liquidity below it. So it is called, I think it's called a double bottom by the retail side of trading. So people thought to buy at the double bottoms, which force generates liquidity below this area. So we know this area will get manipulated. So we expect the price come into this level. So when the price will like pulling um have this correction, it will like, you know, get the liquidity first. It's in an uptrend, but since there's this equal or double bottom right here, price will like push to the downside and then go to the upside after sweeping all the liquidity below this area. So that's one pattern that I could share with you. So this is equal low liquidity. And then of course the other one is the equal high. So like this one. So it's the contrast of the equal low. So stop losses are here above here. And then when the price or retails are when the price hits this level right here, they will sell, right? So um it is always good to check the momentum of the price and um how will like de- depending on your it depends on your trading checklist. If it's like um satisfy the checklist that you have before taking a trade, then it's good. So this is an equal high liquidity. So that's in the um pattern view. So let's go in our chart. So let's see some. Okay, I see. So we can just we can use this as an example. So as you can see here, the price is in the lower equal low, right? So I wanna emphasize this as well as a range, because um after sweeping this one, right? So as you can see, this is a double bottom. So after sweeping this um low, or the equal lows, or this liquidity below it, it moves to to the upside and sweep this equal high level. So sometimes it is, there's a no direction, right? So when it broke this structure right here, we thought that we can change our bias, or we can be in a sell bias here. But look that in this area there's a change of character, but not so really in a momentum way. So we really want to have a confirmation, but when you try to look that in like 15 minutes or much lower time frame, you will see um a lot of movement around that area. So as you can see here, it pushes to the downside, right? That really swept the liquidity below this area, below this price level, right? Below this level. It really took time to sweep all of it and then change its character Like this is in a 15-minute, but it doesn't really have that momentum move that you consider as it is in a bullish trend. So you can see it like in 3 minutes, but as you can see here, it's not really that significant move to the upside. But as you can see here, after this range, this this candle right here really have a difference. I mean, it really changed the character from bearish to bullish, right? So when having that kind of structure, you can mark this one as your demand zone, and you know have a buy limit right here. And yeah, it's just a sample um way of checking or how to leverage your eyes when you see liquidity, and how to enter after sweeping all that liquidity on this equal low. So let's see some trend line liquidity right here. So just let me just show you how the trend line liquidity works. Let me just go to others. Hmm, maybe this one, because it really took time to. So I'm in a 4 hours, right? So as you can see here, this is the start of um this trend line right here, that it is in the app in an uptrend, right? So every time that the price touches this, right, it didn't chat it this price didn't touch the trend line, but it took off, and then goes back again, have this one, and then it took off. So but as you can see, there's a lot of liquidity below this area. Like as you can see here, um this price right here really took down up until this area, right? Broke this area. So um that's the example of liquidity that don't always look that, because big banks or the financial markets are always look on the possibility where the stop losses are, and then go on that stop loss, and then have a big move afterwards. So for sure, people are having their stop losses here, this one and this one, and then and in one session, like this, I think this is a London session, it dropped. I mean, the price dropped and swept all the liquidity below this area. So it's it's always fine to look at this kind of levels and try to incorporate this liquidity and manipulation on your trading, as you can leverage that in your trading style. So hope you enjoy this video. Hope to um subscribe in this channel and like this video. And if you have any suggestions on how to improve your trading and what will be the next topics that I could cover, you can comment down below. So see you soon, guys.